So good afternoon, everyone. As you can see from the screen, this is Marquita Wiley. I'm your host of today's webinar. You may be able to see Terry Lammers, who is our presentation guest today. So it's just me and Terry. We don't have Steve with us today. He was pulled away on a minor emergency, but unable to join us today. So Terry will actually be doing the presentation or update on the programs related to COVID-19. As many of you know, we did receive additional information following last Friday's webinar, and Terry will be presenting all of that along with some additional update information on cash flow, which is a trending subject that we've discussed over the last 3 weeks. Reminder to everyone, we're on the Zoom portal. If you have questions, we encourage you to enter your questions into the Q&A box, and we'll answer those at the end. We will not be answering questions throughout Terry's presentation. One thing that you should know is Terry's presentation or his update should take about 20 minutes. We'll stop when he completes the update and go into the Q&A. The length of the full webinar is very much dependent on you. We will address all of your questions, and hopefully we will get those covered within the hour. If we come up to 4 o'clock straight up and haven't answered the questions, we will address those questions in our Q&A recap that's posted on our YouTube channel. So with that said, Terry, you've got it. You've got it.
So, yeah, if we see a relevant question while we're going through it, feel free to speak up anytime. So we don't have a ton of slides today, but it has been a pretty busy week as far as updates, which is kind of surprising because when we're this far into it, you would think everything's pretty simple, right? Well, the sands of time keep changing. So we are going to give you an update on what's going on with the Paycheck Protection Program. The SBA opened back up the EIDL loan, Economic Injury Disaster Loan, so I'll give you a couple of updates on that. And then the Mainstreet lending program, which is through the Federal Reserve, opened up as of Monday, I believe. So as you can see, there's about almost 130 billion with a B dollars left in the fund. So there's still plenty of money there. It never did run out, which is kind of surprising. Everybody anticipated that when this second round opened up that the money would disappear pretty quick, but it's really stabilized off, so that's a good thing. Here we go. PPP Flexibility Act that was passed on June 5th. The big change here this week is the PPP plan is open for owners that have over a 20% investment in the company. The change is the look back if you have a felony criminal history. It was 5 years and they changed it to 1 year. So not sure what the reason was for that, but they did loosen that up. Loans after June 5th have a 5-year maturity now, which originally was 2 years. Remember now that with your PPP loan, you got 24 weeks now instead of the original 8 to use up your PPP funds. There's a 10-month deferral on the loan right now versus the original amount was 6 months. So that has been extended out. And the payroll costs now only have to be about 60% of your PPP funds versus the original 80%. So that was a change.
Terry, while you're still on this slide, I'll pose a question. It says loans after 6/5/20. If you originated your loan before 6/5, you still have access to these updates, right? It's not for those originated after. Okay.
The loans but it's up to you to go to your bank to get these changes. So the bank is allowed to change, from 2 years to 5 years, from 8 weeks to 24, but you're gonna have to reach out to your bank, and it's quite likely you will have to sign another document changing the terms of the note that you originally signed.
Great. Okay. Good clarity. Okay. Thanks, Terry.
So that's where we got that on the bottom here. Loans originated before 6/5. You need to go back to your bank and ask them to make those changes. So just kind of a reminder that in the second round, there was $10 billion set aside for community development financial institutions, minority depository institutions, certified development companies, and the farm credit system. So one of them that we're reaching out to as far as innovative in our coaching programs is the SBDCs, to present our CEO to CEO program. So if anybody knows anybody connected to SBDCs, we would appreciate the introduction. The forgiveness application, there's 2 new applications now. So the original application for the PPP loan was like 1 page. And when the original forgiveness application came out, it was 11 pages. So that was kind of surprising. So they now have an easy application. So if you're self-employed or have no employees, you're eligible to use the easy application. If you did not reduce salaries or wages of your employees by more than 25%, you are eligible for the easy application. And the easy application and the next one is the full application will both be attached to the video recording when we send those out, probably on Monday. So the third qualification to use the easy application, experience reduction in business activity as a result of health directives related to COVID. So, so that's good news. I think that the easy application is like 1 page long also. So it did simplify it immensely. The full application, they added a page to it. So now it's a full 12 pages. So hopefully, but really, you know, the easy application, there's also a limit on it. I forget off the top of my head what the dollar amount is, but you know, the PPP loan went out to like 4.5 million small businesses with an average size of 115,000. So all of those people would qualify for the easy application. So that's good news. The SBA Economic Injury Disaster Loan, that has been opened back up. So for a while, it was only available to the farm community. And we had an interesting call with a client this week, and they didn't get the EIDL loan money, and they probably should have. So keep in mind, the EIDL is supposed to be used for your working capital requirements. It is a loan. There is a a grant basically that comes with it of $1,000 per employee. So that money does not have to be paid back. How the SBA, the EIDL loan is administered by the SBA, how they are coming up with the amounts that they're telling people is kind of a mystery world, but you'll get an email that says that you've qualified for this amount. And it's a slow process because it's coming through the SBA and not through, you know, your local bank. So we have seen some money moving through the EIDL, but not a whole lot. I mean, of the people that we talk to, I would bet less than 10% of them have gotten any money from that. So keep in mind, this was meant to be used for, you know, your working capital needs. It comes with a 1-year deferment. I believe the interest rate is around 3.5 or 3.75. The big thing with this is it has a 30-year amortization schedule on it. So, you know, even if you got a couple $100,000 over 30 years, that's going to be some really low payments. It is not meant to refinance loans. However, they really don't track what you do with the money. So, but you could use it if you run out of PPP money, you know, you could use it to make payments, you know, a number of things. So that, you know, the client that we talked to, if you're using the PPP money to pay your employees, you know, now you only got 40% of that could be used, you know, to make rent payments, interest payments, you know, forgivable things. But even if you used it as a true loan, you know, there just wasn't a lot of money left to use it for other things. So the EIDL loan, although it's taking a while to get it, is still a good route to go. Now, I think on the next side, yeah, that's the website for the loan application. So now the Master Mainstreet lending program is now open. This is through the Federal Reserve. It's designed for small and medium-sized businesses unable to access the PPP. You know, it says unable to access the PPP, but I'm 99% sure you can use it in conjunction with the PPP. So this is meant for companies that are more in sound financial condition. It's going to be administered through the bank, and the bank will have, you'll see in a couple slides here, the bank will have some skin in the game, about 5% on that loan. So the SBA is guaranteeing 90, or the Federal Reserve is bearing 95% of the risk on that. So it is a full recourse loan. It is not forgivable. And here's a main note for this. So this Mainstreet lending program has some neat perks to it. It can be used to refinance existing debt. So the minimum loan amount on this is $250,000. It only has a 5-year term, so keep that in mind if you're going to try and refinance long-term debt. But the payments are deferred for 2 years, so that's a big deal. We'll show you in a minute what the interest rate is. So the first year there is no principal or interest payments at all. The second year is interest only, and then you got the third, fourth, and fifth year that you'll make, your regular payments on it. So the Federal Reserve came up with a neat little chart here. So you can get the money as a new loan, so it doesn't have to, refinance existing debt. But however, it can be used, the priority loan is basically refinancing existing debt. And the expanded loan would be, say you refinanced existing debt and took some new money. This may be a good tool to pay off some lines of credit and stuff like that. So I showed you the loan term is 5 years with that 2-year deferment. The interest rate is going to be LIBOR. If anybody doesn't know what LIBOR is, put your question in the Q&A and I'll talk about that a little bit more. But the current 1-month LIBOR rate is 0.17%. So the interest rate on the loan is going to be, if they use the 1-month rate will be 3.17. The 3-year LIBOR rate right now is 0.37. So that would put you at 3.3%. So needless to say, it's pretty cheap money. So we talked about the deferral, interest payments. So I kind of covered this. No interest for 1 year. In the second year, you just make the interest payments, no principal. So you can see the loan sizes. The way they're determining what you qualify for is adjusted EBITDA from 2019. So that's earnings before interest, taxes, depreciation, and amortization. So you look at your income statement, whatever your net income is, add back any interest that you had on existing loans, your depreciation, amortization, and if you show that you've paid income taxes on your income statement, you would add that back also. As I mentioned, the bank does participate in this by 5%. So they do have a little bit of skin in the game. So, you're not automatically qualified like you was for, basically automatically qualified for the EIDL and the PPP loan. So, oops. Here's just showing you your principal payments. There is no prepayment penalty, so that's a good thing. Transaction fees, that there may be some fees associated with it. They haven't really shared what those are with us yet. So that's the last slide. But what I really want to go back and kind of re-emphasize is how you use the programs between the EIDL and the Mainstreet lending program. So remember, with the EIDL, you wasn't supposed to refinance existing debt or even pay existing debt off. Although, like I said, they're not tracking it. But the Mainstreet lending program is definitely, that's what this is meant to be used for. So what I want, what we've been trying to tell everybody these last few weeks and focusing on cash flow, in these uncertain times right now, till we get through this, always be thinking about what can I do to conserve cash. Cash is king right now. So keep that on the forefront of your mind. So, if you can refinance some debt, using the Mainstreet lending program, you're going to go, 1 year with absolutely no payments and another year with interest only payments at, let's just say roughly 3.5%. So that's still very cheap money. So, any questions, Marquita?
Yes, we do have one question in Kent. I'm going to pose your question, but I might ask you to elaborate a little bit in the Q&A box. Kent's question is EIDL, what is the reporting requirement? So I'm not sure that I understand exactly what you're looking for there, Kent.
There is no reporting requirements. So remember, with the PPP, that is a loan, but if you use it for forgivable items, you don't have to pay it back. And that's where we talked about the easy application. That's for the forgiveness of that loan. The EIDL is a true loan. It is not a forgivable thing. So they don't care. They don't track it. That's what I'm saying. When, you're not supposed to use it to pay off existing debt, but they're not tracking it. So it's almost a moot point.
Yeah. So Terry, let's kind of talk about Mainstreet, because this is the first week we've presented Mainstreet. We've been waiting for this to come. And I'm thinking of some of the clients I've worked with, especially very low middle market and Mainstreet clients relative to what their balance sheet looks like. And hitting that $250,000 threshold, if you will, could be a stretch for some of the clients I've worked with. I'm thinking of clients who have buildings with a value of say 250 to 500,000. They'd easily hit the threshold and could potentially add more on, retire that loan, which more than likely is at a rate higher than 3.175. Wouldn't you agree? I mean, we haven't seen rates like this in a while. So why don't we talk about the kind of business that is likely to be able to engage, because hitting that 250,000 threshold may take some of the smaller Mainstreet businesses out, but I would say maybe, lower middle market businesses might better qualify.
It's kind of like I'm not telling anybody what to do, right? But that's why there's no reporting requirements on the EIDL. So if you don't, if the $250,000 doesn't apply for you, but also, a lot of the people on the PPP, if you're the business owner, you're paying back what your salary was. So that's kind of a good thing. I would highly encourage anybody to, if you haven't applied for the EIDL loan, to do that. I mean, you're going to get, at the very least, if you're sole proprietor, you're going to get $1,000 that you're not going to have to pay back. But the EIDL also comes with a 1-year deferment, and that could be a big deal. If you have a $1,500 a month payment sitting out there, and your shop's running at 50%, or you're a restaurant. The client that we was talking to last week was a restaurant, and they don't have a lot of outside seating, so they're able to seat, maybe put 4 or 5 tables outside, but they certainly can't seat 200 people like they was before. So having that 1-year deferment on the EIDL could literally keep them from going out of business. So
okay, good point. So yeah, and Kent expands a little bit here, and I think he hit the nail on the head in his expanded explanation of his question. He says in the loan documents, it talks about reporting what you're using the loan for. And any amount borrowed over 25,000 is the threshold he uses. Any amount over 25,000 must be collateralized. So that would be business assets. And I would not be surprised if they even ask you to put a personal guarantee or encumber some of your personal assets. What do you know about that, Terry? I mean, this is a normal loan. This is almost a normal SBA loan, so it has to be collateralized, right?
Yes. So Ken, you are correct. And I think the way they are collateralizing that is through a UCC filing. So they're just going to put a blanket lien on all of your assets. But, and yes, they are asking you, what are you using it for? But they're asking you, what are you going to use it for? They don't come back and ask you, what did you use it for? So I hope that makes sense.
Okay, good. Now, I am looking for additional questions. And as we sit here right now, I'm not seeing additional questions. So I encourage you very, very quickly, if you have a question, to go ahead and enter it into the Q&A box. If we don't get additional questions, do you know, Terry, this may be record,
Yep.
a record short webinar
A
without
long
additional
time ago.
questions. What's that?
We should have got rid of Steve a long time ago.
Oh yeah, oh yeah.
But the other thing to keep in mind, if for some reason that somebody did not apply, I think I might have blew by it on one of the slides, but if you didn't apply for the PPP loan, you only have until June 30th. So I mean, that clock is running out unless they change it. You know, I mean, it's just amazing. You know, we're this far into it, and I mean, we do a webinar earlier in the day and was kind of joking around. It's like, the earlier webinar is mainly business brokers, and they had a guy on there who'd been trying to get some legislation passed for 14 years, and Steve gave that presentation. They're like, Steve, you may be giving updates for the next 14 years. So let's hope not. So
so Sandy has a question here for you, Terry, and she wants to clarify that she originated before that June, I think it was June 5th cutoff, and she signed paperwork. Her promissory note with the bank indicated a 6-week PPP. She would need to go back to her bank and renegotiate that.
Sandy, I don't think you need to. You may want to, it never hurts to double check with them, but you know, that doesn't have really anything to do with your paperwork, I don't believe. So just touch base with your bank and double check that, but that shouldn't have anything to do with your loan documents, okay? Where you would have to go back to them is to get the interest rate changed or the amortization rate and stuff like that.
Okay, Kent asks the question, would his personal property, his home and other personal property, count toward business collateral? And I think that may depend on whether he's a sole proprietorship or a corporation. What do you think, Terry, on that?
I think, you know, you're going to personally guarantee it. And what's been so tricky, Kent, with this EIDL loan is there isn't near as much documentation out there because it's being administered by the SBA. So they've been a little bit tight-lipped on how they're doing that. But I would think that would make sense that, you know, that you could use, I mean, on a regular SBA loan, you can. So I don't know why you wouldn't be able to on this. So.
Well, I think you would be able to. I think part of what he's asking is, would it be encumbered as a part of the overall assets? And I don't think that would be an issue if he were an S Corp or a C Corp, right?
Correct.
Yeah.
So.
Okay, Joshua, I have a simple question. I have a side gig. Yeah, I know what a gig is. Delivering food for a food delivery service. Okay, food peddler. He works as a contractor for the food service. COVID cut maybe $400 a month from his income. Do I have options of relief? I think he does. I have more than one job, so I'm not starving, but interested in relief. Absolutely, Terry. You want to talk to that?
I mean, technically, you're eligible for what you was making in 2019. So let's just say you was making $1,000 a month, and if you cut $400 a month off that, so now you're eligible for $600 a month. But if you're working at a part-time job and you're earning another $400 a month there, so that leaves you net $200. I think you're only going to be able to get $200 a month through the PPP program. But for as simple as it is to fill out the application, I'd go ahead and do it. You know, why not? So
yeah. And Joshua, what I can share with you is, like you, I am an independent contractor, and I applied as an independent contractor for both EIDL and PPP. The amount that you're eligible for is dependent on what your earnings were in 2019 or the 12 months leading up to, I think it's the end of February, which is when the COVID disaster began. So you may not be able to exactly calc that amount, but you can estimate it. And then you hear back from your bank and from the SBA. And I will share with you that I, by chance, got in early on the EIDL, and I also got the grant. So I got the $1,000 grant. I'm a company of one employee. I got the grant. And then for PPP, I also received a PPP loan, which will be totally forgivable. I'm well into filling my forms out and I see it will be forgivable. And I just received word from the SBA also that I have an option to borrow EIDL money, which I would have to pay back. So all of those programs, you are exactly as I am, an independent contractor. All of those are eligible for you. Your dollar amounts may be a little bit different, but it's out there. It's accessible to you.
Thing, if you're receiving, I'm kind of double thinking that what I told you, because the $400, the loan is forgiven by the bank, so they're not going to know if you got W-2 income outside of the PPP loan. So I think you're going to be okay on that, and you're just going to go by what you would have earned in 2019.
Yes.
So I would backtrack on what I said there a little bit, Joshua. So
okay.
But nonetheless, I would definitely go talk to your bank about getting it. And, if you need a banker, let us know. We'll be happy to refer somebody to you.
Great.
And which goes back to, again, what we've been saying all along. It is very important that you know your banker. So, especially whether you're a small business or, you need to know a commercial lender. And in these cases, although Marquita's had luck with a larger bank, for the most part, in this situation, having a community bank, has been a little bit more beneficial because you have somebody that you can pick up the phone and call. So can't reiterate that enough.
You bet. Lisa asks, she works part-time and she files her personal tax with a Schedule C. I'm adding words here, Lisa, so keep me honest. She works full-time elsewhere. Does PPP or EIDL have limits if she's not full-time relative to what she brings in on her part-time job?
See, I think that's going to go back to, again, your qualification is off of what you made, in those prior how many weeks to determine what you're eligible for through the PPP. And, if you're Schedule C, your job is, you report on Schedule C, you're still going to qualify for that PPP.
Yeah. Yeah. So I can share this also because now I'm not exactly as you are, Lisa, but similar. My husband and I file jointly, but my business, I file a Schedule C, and I used my business Schedule C, which I include in my personal return, and I was able to apply with it only the Schedule C. I didn't have to submit a full personal tax return. So I would say apply, talk to your bank, and see where you are. Fair, Terry, in terms of my assessment of that?
I agree 100%. And, if you got any other questions, I'll throw back up here again real quick. Write down our number and give us a call. If we need to dig into it a little bit, we can always do that. So let me do this real quick. Can you see my screen again?
Okay, yes, Terry, you're sharing.
Let's go. Lisa, there is not our phone number. Okay. My phone number, here, I'll put it in the chat. Can you put it in the chat real quick? Marquita, 618-330-8922.
Okay, I have to answer a question. So let's see here. I can type it. Here we go. All panelists will see it. I cannot pose a question, and I've answered all the questions, so I can't put it out there. Okay, let's see if we have a whiteboard to put it on.
I think, here, I can do it here, I think.
Can you do it from your end?
Yeah, I can.
Yeah. Worst case, what we'll do is we will include, when we send the email out informing you that we have posted the YouTube video of this webinar, we will include a telephone number for you to give a call if you want to ask additional questions. We'll be happy to answer them.
There you go. So I just posted it.
Great, thanks, Terry. So in the interim, Janice posed a question. She's asking, a client is asking if PPP funds are owner's salary as an employee of the company performing a duty that is paid through a payroll firm. Must the owner disallow their salary when applying for PPP forgiveness? And that's Janice in Arizona is asking that. So let's get a little clarity.
The client is asking if PPP funds
paid for the owner's salary as an employee. So the owner, rather than taking a draw on the back end, is actually paid a salary, and that's reported through a payroll firm. Must the owner disallow their salary when applying? I know the answer to that. Take it, Terry, if you want. I know the answer. Does it make sense?
Yeah, you don't have to take that out.
No, only up to 100,000. If the owner makes more than $100,000, they have to take any amount over 100,000. But any amount that the owner pays himself or herself under $100,000, it absolutely is a part of payroll, and it counts.
You are correct. Yeah. So no, and that was actually the easiest way, because that's where it was really kind of confusing at the beginning of this. If the owner wasn't paying themselves a salary, that's where it got a little squirrely, on how they was. So if the owner wasn't paying themselves a salary and they was just taking it as a draw on their balance sheet, that hurt you, because then you really had to rely on what was it, like line 13 on your income statement. And if you didn't even report it that way, then you was really kind of out of luck. So.
Yeah. And so Janice comes back and she thanks us for the answer and says, yes, that's what I thought, but the accountant disagreed. Here's the problem with these loans. Things have changed over time. We have seen the rules kind of sway a little bit. When you apply for forgiveness, it is incumbent upon your bank who originated the loan to approve everything that you put into that application for forgiveness. So you put it there, you talk with your banker about it, and if you get through that review process, you're good. And the banks are really up to speed on these changes that have occurred over time. And they're the best point.
There's undoubtedly, there is some gray areas in this, but Marquita's exactly right. It's between you and your bank. And the good thing is, the SBA is relying on the bank to basically sign off on the forgiveness. But what makes the bank rest at ease is there's no recourse to the bank if somewhere along the line the SBA didn't agree with it. And if you remember, the SBA has come out and said that they're not going to audit any loans, under the $2 million mark. So, there's 4.5 million loans out there with an average of 115,000. The chance that ever is going to get questioned is nil to none.
Yeah, but your bank is that audit point. So again, we have no questions, no open questions. So even with those added questions, Terry, we still hit a record. It's 3:34. So we did this in roughly 35 minutes today. So with that, oh no, Sandy, as an FYI, my banker told me to file a second PPP application to pay myself under my social security number rather than an EIN, because I took draws instead of salary, and that makes sense. Yeah, that makes sense. And again, that's working with your banker and the banker's interpretation of the rules. Absolutely. Yeah.
So Sandy, good to see you back in the Lake of the Ozarks. Sandy's been on about a 6-day road trip or 6 days of driving. So wonderful.
Okay. So we're gonna.
She's having.
She says 2 weeks, 2,500 miles. So that's quite a road trip.
That is quite a road trip.
Great. Well, look, we're going to wrap it up. We're going to wrap it up here. So Terry, I'm going to give you the last word. I'll just remind everyone that, as we always do, there will be a recording of this webinar on our YouTube channel. In addition to the webinar itself, there will be documents. I assume, Terry, we will be putting the new PPP forgiveness application out. There was a new one that was released since we posted one a week or two ago. So we will add the new PPP forgiveness applications, and we will have a transcript of the Q&A that took place during this webinar. So with that, Terry, you get the last word and we'll wrap it up.
Yeah. So, hey, I think, a couple of things that we've seen come up today is one person told me this, one person told me that. Think of it like going to the doctor. Don't hesitate to get a second opinion from somebody. If your bank your banker or your accountant or friend or somebody or us, you know, says something and you're like, huh? Double check it with somebody. Make sure, because these rules are changing a lot, and you know, it is, you know, we've been saying all along, everything we say, you almost got to put an asterisk by it, because I mean, we actually literally had times that we're coming on the webinar at 3 o'clock, knowing that at 8 o'clock somebody completely changed the ball game on us. So ask questions, and cash flow, cash flow, cash flow.
And great. And then your banker, for all except the EIDL, your banker is your origination source, and
Yep.
they will be your very best and last word, in my opinion. So that's it. I ended up, Terry, taking the last word anyway, not giving it to you. Happy weekend to everyone. We'll see you next week.
Thanks, guys.
Bye.
Bye.